So welcome back, guys. Today I will be showing you, I will be teaching you about the gold 1 hour and 15-minute secret. So you find that, let's go, you are planning to take a trade, and then a 1 hour fair value gap or order blocks, let's say, forms above you, and then in your mind you think like, this 1 hour fair value gap or order block can reverse price, and then it takes me out and then continue to our direction. But this is not the case mostly on gold. So I'll be showing you some examples and explaining you. So this is a 1 hour time frame, and this is essential mostly in the entries. So you can see here we were buying, we had bullish bias. So maybe you had done your analysis and seen that this thing will skyrocket, and so you are looking for an entry. So price had first swept liquidity there, and then there was a 1 hour fair value gap here. So how should you look for an entry? Should you be scared about this fair value gap taking you out, like price coming, hitting the fair value gap, then coming to your stop loss and then going up? So this is what happens. So once you define your direction, and let's say here you had decided that you should buy gold, and then you see this fair value gap, you should first look like for the you should first wait for a 1 hour candle to print, and if it prints in your direction, this candle, let's say this candle printed in our direction and then engulfed, you can see. What do I mean by engulfing? Like it closed above our previous candle. You can see the blue candle closed above our red candle, so that means it engulfed. So it has printed out, closed above our candle, and tapped into our fair value gap. Now you should come to the 15-minute time frame and look for an order block, a well-defined order block, and then after the order block, there should have been a good momentum to the upside. So at this zone here, price left a 15-minute order block, and then it also skyrocketed, like it had a good displacement above here. So where should be your entry? Your entry should be on this, on the start of this 15-minute order block. Okay, and maybe your stop loss there, and maybe your target you wanted to target, let's say a risk to reward ratio of 12:66. So this is how you find that sniper entry on that 15-minute order block. Okay, I hope you have understood that. So let's go to another example. Yeah, we had this. So on this, let's say you have done your analysis and you have seen that the price is likely to go up. So, and then you waited for a 1 hour candle to print out, and then it printed out, but then it didn't engulf. So what should you do? You should wait for another 1 hour candle to print out, and it printed out, and then what it did, it came and tapped into a 1 fair value gap. Okay, right. So now where should your entry be? You should not come chasing after price at this zone. You should wait for it. So already we can see that what it did, it also left a 1 hour order block. This confirms to us that this zone will be strong, and then we go to the 15-minute time frame like we have done before, and look for what? We should look for a 15-minute order block and a good displacement. And what happened? So price came back. We had a 15-minute order block here, and let me mark it. And then did what? Went up. Okay, so where should have been our entry? maybe someone would have taken his entry at the start of that order block at the edge. Another one would have taken his entry at 50%, and then you put your targets. So let me show you the data that I've been collecting for that strategy. Yeah, I've journaled some trades on that entry. So let us look at this example. So on this example, we had price had tapped into the daily fair value gap and had started going up. This is a 4-hour time frame. And then price came down and tapped into a 4-hour order block, which supported price. Let's go to a 1-hour time frame. So on the 1 hour, after price supporting, after the 4 hour, this 4-hour order block supporting price, price came and engulfed the previous candle and then tapped into a 1-hour fair value gap. So you can see had this fair value gap, which will reverse price a little but not change the bias. Okay, then what should you now do? Already you have the bullish candle. You should go to the 15-minute time frame and look for a 15-minute order block that was left and there was a good displacement, and then your entry comes in here. So at this point I got into the trade at the 50% of the 15-minute order block. That was our perfect entry. Let us look into another example. Yeah, so price here, this is a 4-hour time frame, and you can see we were at all times highs. Yeah, we came and swept liquidity, just swept liquidity, no strength to the upside. Okay, so on sweeping liquidity, our TP would have first been at this point, like after the break of structure in this 4-hour order block, it will maybe have supported price a little. Then on 1-hour time frame, what happened? After the liquidity take, we got an engulfing bearish candle, and then we had a 1-hour fair value gap here. So this would bring a reaction to the premium 15-minute P point of interest. Okay, and which is that point of interest? It is the 15-minute order block that had been left after and had a big displacement to the down. Okay, you can see this 1-hour fair value gap pushed price to this 15-minute order block, and you can see how the order block had been formed. An order block and then a good displacement to the downside, and then price came back to the 15-minute order block and then started selling. Okay, I hope you are with me. Then let's go to this example 5. Yeah, price was in a 4-hour fair value gap, and we were projecting some sales. Okay, so let's see, it had respected the 4-hour fair value gap well. You can see that the wicks are just touching 50% of the fair value gap, and then they are closing below. Then on 1 hour, what happened? uh, this candle, this 1-hour candle, closed bearish and it also engulfed. So that means this will be a high probability trade. Okay, and then there was a 1-hour fair value gap below here. We can see, and there was a lot of selling pressure. Even the formed bullish candle didn't engulf any bearish candle. You can see after this 1-hour fair value gap started rejecting price, this didn't even engulf the bearish candle, so meaning there is a lot of selling pressure. So what should we do now? Because we want to sell, we should go to the 15-minute time frame and look for an order block that had a good displacement. Okay, and you can see there was a 15-minute order block here and a good displacement to the downside. So that would have been our entry, a perfect entry. So let us go to the other example. So we had a 4-hour order block here and had been well respected. Okay, so and we wanted to buy. and price at this zone had also violated this 4-hour order block. It hadn't respected it. Therefore, we had a bullish bias on our way. So we go to the 1-hour time frame. On the 1-hour time frame, what did we have? Price printed out two bullish candles, and you can see this second candle had some magnitude on it. Okay, but then we had a 1-hour fair value gap, and what did we expect? We expected this 1-hour fair value gap to give some reactions to where? To the discount 15-minute point of interest. Thank you. So on where do we go? We go on the 15-minute time frame and check for an order block that had some displacement. And you can see price came back to this 15-minute order block, the discount, and then reversed. A very good entry. So this is how you, we have also other examples. This is how you catch these moves where you see a 1-hour fair value gap or order block above you, and you have a 15-minute good point of interest. You can see also here we had tapped into the 4-hour order block, okay, and we were to push higher. So what did we do? We went into the 1-hour time frame. There was a bullish engulfing candle that had been printed out, and it was showing buys. So we go to the 15-minute time frame and look for a 15-minute order block, and you can see first entry on the 15-minute order block, and you will also wait for a confirmation of the 5 minutes, that is for a re-entry. So I hope you have understood this 1 hour and 15-minute secret on gold, and you can go into your charts and try to get those examples more and more and practice them, and I know they will be useful to you. Thank you. Remember to like, share, and subscribe.